I know.
Sir?
So I said tonight we're talking about institutional support and resistance. As a matter
Okay,
of
sir.
fact, the only support and resistance that you need in the forest. Right. That's the only support and resistance.
Yeah.
Forget about all those trend lines you draw. Forget about going to daily time frame or looking for market to react on the trend line or in a particular spot and you wait for the third time. You don't need all those shit. Right. So we'll talk about the institutional support and assistance tonight. Right. Basically, we have three as far as the forest is concerned, right? Whether forest PPA or or whether currency pair synthetic or stock markets, anything you could think of in the financial market. So far it has an open, a high, a close, and a low, it is applicable. If time permits us today, we might diversify it and look into currency pair tonight if time permits us. Right. But as far as the institutional support and resistance is concerned, all right, basically the institutional support, don't mind my writing. Right. Institutional support, and let me just abbreviate it. Right. Right. Basically, the support and resistance can be in three forms, right? As far as the financial market is concerned, right, and even normal rule of life, right? There are things that you look at or criteria that you look at. You see, when we talk about the theory psychological, most especially BTMN talk did emphasize on that three of the thing, right? Did emphasize on that three of the thing, right? So as far as the financial market is concerned, there are three views you can give to it. And when you're doing your analysis, you have to put in consideration these three views. Right? The first one is your standard view. The first one is your micro view, right? You have the micro view, you have the standard view, right? And we have the micro view, right? We'll talk about this view now, right? For your standard view and your micro view, right? Basically, this is when you look at the market with your 4 hours time frame and your daily time frame, right? And your D1 time frame, right? Up to your weekly, right? Weekly, and your monthly time frame, right? So for your standard view now, right? Basically, that's your H1 view, right? And for your micro view, that's your M15 downwards. Right, that's your M15 downwards. Right. So now, when we now want to apply this into our support and resistance, right? So as far as the micro view and the standard view, we match them together, right? So for you to determine your institutional support and resistance, right? The normal way, pretty way of doing your support and resistance is you go to your higher time frame, you draw your maybe now when it comes to this now, there are two ways of drawing your trend line. Is it either you use the vertical line or you use the horizontal line. I hope you are with me, right? I hope you are with me.
Yeah, we are here.
Which is
Okay, so as far as the trend line is concerned, is that you draw the trend line horizontally like this, or you draw it vertically, diagonally like this, or you draw it vertically like this. And normally what you do is that you wait for market to react to this point first time, the second time. Then the third time you can start looking for yourself. All right? Is that not the way you draw your support and resistance? Don't be so you draw.
It is.
So from tonight now, your drawing of support and resistance will change, right? Or you draw it diagonally like this. That okay, price. You draw it diagonally like this. The price touches it like this the first time, the second time, right? You place yourself, right? But this is just the normal retail traders mindset. Eh? But as far as the big boys, the banks, and other financial institutions are concerned, right? The only support and resistance that we have is of two types, right? The first one will encompasses these three time frame, these three views of viewing your market. Then the second one now will not basically will deal with this third one, this third view, right? So let me start from this micro view. For this micro view now, right? That's where your Asian high and Asian low comes into play, right? That is the highest point the market will reach during the Asian high. This one will be for the intraday support and resistance. For those of you that are trading daily, that want to be trading every day, or people that are day trader, that is scalper, right? When you get into the market, the first thing you need to look at, in this situation, we don't trade during the Asian session. We start trading from London session, right? So when you are coming into the market during the London session, you look at where your price is. Hotel, is that you mute yourself? Is that you mute your mic? Hotel. So normally we don't trade during the Asian session. You start trading from London session. So what you need to do is that once you are coming to the market during the London session, look at where price is, right? And then look at the high of the Asia and the low of the Asia. This will be your intraday support and resistance. If price is going to be reversing that day, the first area of consideration will be your Asian high or your Asian low. That is for the second type of drawing your support and resistance. That is for your intraday support and resistance. While your normal or general support and resistance is this, right? It is just we categorize it into 4 levels, right? The first one is our 0 level, our 20 level, and our 50 level. Then we have our what? We have our 80 level, right? We have our 80 level. So don't confuse yourself. You see this 0 level is the same thing as you having 1,000, 2,000. Same as you having 1,000, 2,000. As a matter of fact, you can have 15,000. As a matter of fact, you can have 15,000, right? Now for currency pair now, David now putting you to consideration, your own range is not up to this. Because the kind of quotation that we have in our currency pair can come in there. But for those who are trading volatility 75, volatility 50s, volatility 25s, normally your quotation is this. You always have it like 15, 6 digits now, 51, 200, right? It's still the same thing, right? This is still your 0 level. Then for your 20 level now, you can have it like 1,000, 20, right? So the same thing goes to your 50 level, right? The same thing goes to your 50 level. You have it to 1050, right? Then this you have it to be 1080, if I'm not mistaken. So after 1080, the next thing we are going to be having is going to be what? Anybody with me? After 1080, what else? The next thing you are going to be having, you go back to the zero level, zero level, and that will be giving you, that will make it to give us what? 1100. I hope you get it.
100.
I hope you get it.
Yes.
So this is the only support and resistance that you can have. If you look at my chart very well, whenever I post that, you don't see me draw trend lines. I don't. These are the only support and resistance that you need, as a matter of fact. Right. So let's go to the chart and see how the chart, how it plays out. Then we'll give more attention to it in the chart. So who else has not choosing his pairs? There's two major pairs that you are choosing. Who else has not done that? So let's work with your crash 1000, or which pair should we work with?
Yes, the crash 1500 will be okay.
Crash 1000 or crash 500? I think
Yeah.
Okay. So okay. So basically now, for you to see the effectiveness of this, right? What you need to do is that you need to go to your 1 hour time frame. Put your 1 hour time, 1 hour time. Right. So first and foremost, what you need to do is that you need to pay attention to this, your quotation here. Look at this blue, look at this area here. Right. What do I have there?
6398.
6398. So that means you have two pips. Also be 63 to be 6,400, right? Right. For you not to confuse yourself.
6,400.
Yes. For you not to confuse yourself, once you open your chart, look at where the market is currently. Approximate you to the nearest zero level. Right. Now this is 6398. The closest zero level that we have is going to be 63400. Right? That's the closest zero level that we are going to be having. I hope you understand.
63400.
Yes, now currently the market is
63100.
No. This is the first thing you need to put into consideration. Look at where the market is now. This is 6399, right? This is 6399. The nearest zero level will be 60. This is the same thing as 6,399, right?
Okay.
So the nearest zero level will be 6,400.
400.
That will be the nearest zero level, right? I hope that is being noted. Okay, let's take consideration. This is crash volatility 25. Already the market is at what?
2102.
So the nearest zero level will be what?
2100.
2100.
Exactly. Right. So that's what you need to do. You look at your quotation, right? So you start leveling from you approximate to the nearest zero level, right? For volatility 75 now, so that I'll do justice well because those who are doing volatility 75. Because now normal quotation is not like the other one there, right? It's not like the other one. So where are we now?
9250.
This is let's go to our 1 hour. That was 4 hours. So what do I have?
9256.
So for the calculation of your what do you call this?
92,585.
Okay, so the nearest one you can use is your what? This was
92,600.
Exactly. Right, so that's the nearest you use. That's what you use. That's your volatility for you. Right, so let's go down to our price 500. All right,
Okay.
let's go down to our price 500. So the market is, we're on our 1 hour time frame. Go and so we're on our 1 hour time frame now. Okay. So we agreed to you the nearest 00 was our 6,400. So for you not to
400.
yes, for you not to convince yourself now, right? You can use different right, you can use different color for it. Right, you can use different color. So this one is going to be our so this is going to this is let's start. So for our 00 level, we're using color red, right? We're using color red 6,400, right? So we use red color for it. Right? So we have it there. So from 6,000, so ideally now, you see one thing with the forest market is that basically the forest market can, a pair cannot move more than 200 pips a day, approximately 200 pips in a day, right? But in some worst cases, we can have
that is
all pairs, forget about whether currency pair, boom and crash, or whatever currency pair. Currency pairs are around, currency pair cannot move more than 100, 200. The currency we'll talk about it to be 100, around 100. And with you, sir.
Sir, do you mean each section or the whole of the 3 sections?
The whole of I said each day. I didn't say session. Each day.
Okay, each day. That is the 3 sections in a day, the 3 sections in a day cannot exceed 200 pips.
Yes. In ideal situation. Underline that ideal situation.
Okay, sir. So how can we calculate these pips?
You don't have to calculate pips. That is fundamental now. That's fundamental now.
I don't know how to calculate the pips.
You don't have to calculate pips.
No, sir.
See me at the end of the class.
Okay, sir.
Or is there any other person that don't know how to calculate pips? Any other person that doesn't know how to calculate pips?
I don't know it yet.
Lawa, you don't know how to calculate pips. You of all people.
I don't know it.
It is well. Don't worry, I will talk about it briefly now. Then I'll talk about it briefly now, and I'll drop a video for you, so you go and watch on it.
Okay,
so,
sir.
But the easiest way that you will not confuse yourself, is for you to draw horizontal line from where you want to start and where you intended for it to end. So now, this is, let's say you want to calculate number of pips from here. You want to calculate number of pips from here to here, right? The easiest way of work is for you to just draw a vertical line there. Just draw a vertical line. This is the beginning, and this is what? This is the end. So the beginning was 6378. Right? Right? So you take you write down this value and you write down this value and subtract it. Whatever you get, that's the easiest way of it. And you will not confuse yourself. Subtract your starting point from your what? From your ending point. Mhm. Though we usually use crossbar. Eh? Is someone doing the calculation?
Nope. I am not doing the calculation, sir.
Someone should do the calculation for us. How we should do that one? Subtract 6378.857 from 6624.89. What do you have? What do you have? 6624.898 minus 6378.857. What do you have?
Who is doing it? Who is doing the calculation?
Oh, shit.
246 pep.
200 and what?
46 pep.
So that's your pip. 246. Right? So that's your pips.
That's our what?
That's your pips. That's your pips from year to year.
Yes,
What did I
that's
say?
pep. Yeah.
What did I told you? I told you in ideal situation, we're having less than 10 minutes. I told you in ideal situation, each pair does not more than what? 200 pips in a day. Eh? Right? This was the beginning of that day. This was the hour of that day. And we have 246 pips. Right? So that's the easiest of all. The other method you can use is for you to what? To use your cross here. So you put it from here, from a starting point. We have 241. We have 240. Do you see it there? The first one was 638.
241.
We have 241 points. That's we have 241 pips. 41 points. We have 241 points. So that's the second way of it. Right? I did told you earlier that in this situation you don't have more than what. This is a what? A what? An on-eye. This is an unideal situation here. This is an unideal situation whereby we have 400 pips. Look at it. This was the high and this was the low. We have 403. And most times when you have that exorbitant pips, right? Is it that the day before that day, the market will be in consolidation, or the following day the market will be in consolidation? Take note of it. You can go and do your back test. Look at it. The previous day, the market was in consolidation. So we had 400 pips this day. The second day, the market is still in consolidation. So in like this,
it's not.
It's not what? Hello, it's not what?
It's not that I don't know how to calculate PEP.
Okay.
But there is a outline level that you listed before this chart that is 0.50, 0.80.
That one is all about your support and stuff. I've not even talked about that one. I've not talked about that level. Okay,
I thought that's what you want to base on.
No, there's difference between support and pips now. I'm asking how to calculate pips. All right. So in ideal situation,
I know how to calculate PEPs.
Okay, no problem. So in ideal situation, each pair in the financial market would not move more than 200 pips in a day. Then in unideal situation, it can be more than that. Right? But base your mind on it that in ideal situation, we have 200 pips in a day. So any day you have more than that, automatically a day before it, or like 2 days before it, or 3 days before it, there must just be a consolidation before that exorbitant move. Or after that exorbitant move, there will be a consolidation in the market, where the market will be in the ranging market. That's what I mean by consolidation.
That means they will calculate the whole PEP together.
Exactly, that's what they are doing. Because the truth is that the market maker, right, they have a limit on how they can move the market. You understand? Because if they can just do anything like that,
Okay.
they can just tell it to the market like 1,000 pips a day, and everybody will be rich. You understand? And many people will go broke. So there's a regulation. There's a regulation there that controls it. You understand? So they give them a working
Okay.
range of 200 to 200 pips in a day. But if they can, and while in a week, for those trading currency pairs around 600 to 700 pips in a week. But for boom and crash, you can have it up to like 1,000 pips. You can have it to up to 1,000 pips. You understand? You can go and do your calculation, so that you confirm it. So that's tips for you. That's tips for you. So now we'll go to the main thing for the day, the business of the day, which is our institutional support and resistance. All right. So the first thing I told you, the first thing to do is for you to look at where the market is currently. Then you approximate it to the nearest zero level, right? You approximate to the nearest zero level. I hope you understand that. So after that, after you approximate, when we were talking, it was around 6.3. But even at now, we are what? We are in 6,400. So the nearest zero level is about 6,400. I hope you can all hear me. So remember what I told you, we have four range: the 0 level, right? The 20 level, the 50 level, which is the mid, and the what? The 80 level, right? So let's put this into consideration before we get exhausted, our time gets up. So we've done the 0 level. So the next thing we want. So now, why I went into the pip operation into pip is that, so what you do is that once you determine where the market is, you add 200 to it. That will give you the highest point the price is going to go. And you subtract 200 from that point. That will give you the lowest point, right? You understand that point? Do you understand that? Hello.
Sir, do you mean we should
Once you
forward now?
Once you open your chart and you look at where the market is currently, you approximate it to the nearest zero, right? Then after that, whatever you approximate it to, add 200 to it. That will give you the highest part of it. Then you subtract 200 from.
Okay.
You add 200 and you subtract 200. Get the logic. Now, don't let me confuse you. We have
200 to get. Add 200.
You add 200 to get the highest, and you subtract 200 to get the lowest. You understand that point?
Yes.
Yes, sir. Can you just make an example of it so we can get it very well?
So we approximated it to be 6,400, right? That was what we approximated to, right? 6,400 plus 200, that will be what?
Yes, that is 6,600.
6,600.
All right.
Yeah.
That will be what? 6,600. That will be 6,600. All right, so let me edit it. Who is that? Who is that? Who is that? Avec, unmute yourself, you know your voices. 6,600, right?
Yeah.
Right? So you have it there, right? You've added 200 to it, then subtract 200 from the original rate, which was 6,400, right? Which was 6,400.
Okay.
So that will be what?
6,200.
So everybody should rejoin with the same link. Everybody should rejoin with the same link, right? After this.
Okay. Okay.
So we have it to
Okay,
be
sir.
this 6,200, right?
Mm.
So that one is a little bit below. We have it here like this, right? I hope you now understand that point.
Yes,
Right,
sir.
so that's what you need to do. Let me send another link.